Hey everyone, it's TradeTechFX US in sunny Florida. FinanceFeeds is joined today by John Devine. John, welcome. Thanks for taking the time to speak with us.
Thank you very much for having me.
So you're the head of OTC digital asset trading at Blockfills, right?
Yes, sir.
So last year, obviously we all know sort of crypto winter set in, right, if we could call it that. Yep. But Blockfills, your company, still managed to grow trading volumes last year. How were you able to achieve that?
Yeah, so I think Blockfills has a very unique position in the marketplace from a perspective of leadership. So after the crypto calamity of 2022, let's call it, there was a whole refocus on how do we judge counterparties. And it goes beyond just taking a look at a balance sheet, right? Because I think some of the major blowups we saw that there was, in theory, a substantial balance sheet behind those companies. So the next step is in evaluating a counterparty, aside from balance sheet, which is not something to lean on, as we have found out with likes of FTX or Celsius, it's the leadership. Who is running these companies? And I think that's where Blockfills has stood out. We like to think of ourselves as the adults in the room, and more of our clients are telling us this. They say, when we do our counterparty assessment, we're looking at who runs this company. The CEO of Blockfills is Nick Hammer. Very well-respected individual in foreign exchange markets and obviously in crypto markets. Gordon Wallace is the co-founder of Blockfills. Again, storied career in both FX and now in crypto. So I think those are, I could even go further. Perry Parker, who runs our derivatives desk, another gentleman who just has a very well-respected career in trading financial markets. So I think that's what set Blockfills apart. And is what allowed confidence in our primarily institutional clients to continue doing business with Blockfills, or we have experienced really a tailwind in onboardings, and then for existing clients to really ramp up trading and migrate some flows that were maybe getting done at public retail exchanges, and then now directing those flows to Blockfills. I think that's what separated us and what's allowed us to really accelerate when others in the market are not doing so.
Great. And in October, I think in October of last year, you guys integrated crypto CFD products into your front-end platform, which is called Phoenix, if I'm correct. Can we talk a little bit more about Phoenix in terms of what the platform offers, in terms of a solution, how it may stand out from other trading platforms in the space? Certainly.
So in terms of crypto native infrastructure, Blockfills, from what we've heard from our client base and what we've seen, taking a look at other offerings in the market, Phoenix is a standout product. It gives you a very professional feel when you're coming from a legacy platform, for example. You're used to a lot of the bells and whistles. One cancels the other orders, stop orders, trading from charts. Obviously, really good analytics on positional data. And I think that's where Phoenix has shined. It was really the first professional focused platform in crypto, and it's just been underscored by our existing client base and then also prospective clients who see the Phoenix platform and they say, wow, this is exactly what we're looking for. We have not really seen an offering quite like Phoenix in the marketplace. And then once people turn it on and they start trading, they really enjoy. I think the standout feature is being able to trade from the charts, because in crypto, the depth of market, the market is so volatile that trading from the dome is not as advantageous as being able to trade and move orders right on the screen and being able to see that wide range of orders throughout your book. Sure. On the chart. That's a big thing for Phoenix, and then all the functionality that goes with it.
And listen, I might be wrong, but it seems like not every trading platform out there that can handle crypto is advanced enough to have that full stack of prices that we're used to in our in many traditional markets, right?
I would agree, and I think this is where Phoenix kind of stands out amongst our peers in the marketplace, and it's just being reinforced by what we're hearing from active traders on the platform and then prospective traders, that they're looking for this professional feel, and also in digital asset markets. A lot of times platforms have functionality issues, positioning issues, how fast they're updating quotes, updating positions. Blockfills just shines in those regard, and I think we will continue to outpace the industry in that regard.
Can the Phoenix platform be white labeled?
Yes. So this is actually another interesting thing. So what we've seen kind of to start 2023 is a massive increase in interest to take Phoenix from other liquidity providers in digital asset markets or other broker dealers, those types, and actually white label Phoenix, put their brand on it, and then put it out to their clients. I think that's a testament to the superiority that Phoenix has in its position in the market right now. The demand to white label and put people's brand on it only reinforces, again, the standout that the platform is.
Great. I think you also recently launched they're called carbon offset products in partnership with a company called Isla Verde Capital. I wanted to ask, to whom are these products being sold to or targeted in terms of market participants?
So this is extremely exciting. Carbon offsets and renewable energy credits, they have a very interesting niche within digital asset markets. I think, just taking a step back, one of the big innovations for smart contract trading on some of these other protocols within digital assets has been carbon offset markets. There's been some leading projects that have been able to facilitate market access to carbon offsets and renewable energy credits. So Blockfills, we took a look at this and we said, it's very interesting, but how do we serve an institutional client base that doesn't want to go through a smart contract protocol and trade those types of assets without dealing directly with a counterparty? So what we have done is we've actually created a physical offering, and this is targeting primarily to Bitcoin miners. Bitcoin miners are either going to be buyers or sellers of renewable energy credits and also carbon offsets to an extent. But in that regard, a Bitcoin miner who wants to be able to claim that electricity they're pulling from the grid is coming from a renewable energy source, they can purchase RECs, and the REC gives them the claim to state that the electrons they're pulling from the grid are sourced from a solar energy project, a geothermal project, et cetera. And I think that's a standout. These publicly traded miners, they're running into sustainability initiatives as part of being a publicly traded company in 2023. There's sustainability initiatives, and also there's massive push from large investment banks and large investment vehicles to make sure Bitcoin miners are meeting ESG targets. And so what we're seeing is a lot of funds that are looking to invest in public companies, they have these ESG mandates that they must follow in terms of who can they even look at to invest in. And I think so from a publicly traded Bitcoin miner perspective, being able to state that the electrons you're pulling from grid power is sourced from a renewable energy producer, it's a massive tailwind in terms of attracting capital investment into the equities.
And how do you see this asset class expanding, and to what other possible market participants in the future? Because it seems to me that the whole idea of, if we even speak more broadly, ESG, right? These terms that they're kind of throwing out to us in the corporate world, and being environmentally sustainable and things like that. Where do you see this product class going in the future in terms of, maybe being adopted by or seeing demand from certain market participants that maybe don't use them now?
Certainly. So I typically shy away from using the phrases ESG or sustainability targets, but I use them in this context just to bring people home, and I think most people understand what we're talking about with those keywords. I do like to typically shy away from them, though. But in terms of market growth, obviously there's a massive social movement going on right now in terms of acknowledging externality costs to electricity consumption, and then an externality cost to just our daily lives in the modern world. How are we impacting this world we live in? And so with that being said, the pricing carbon and having carbon as part of your investment portfolio seems to be in line with the broader trend of acknowledging externality costs and then compensating for them. And we can do so by purchasing carbon offsets or purchasing RECs. And I think the underlying issue for me and for most who are in financial markets is that this approach is a market-based approach, we're as opposed to a tax. That would be the alternative. If we're gonna compensate for externality costs due to electricity consumption or energy production, et cetera, it's either going to be taxed or there's going to be a fair market price put on it. And thus far, the past 15 years, the world has decided that we should be doing an open market price on carbon. That's what motivates me to continue expanding market access. And it really is to prove that the free market can handle this externality issue and we don't need to rely on a government tax to regulate our human behavior. We can decide to live our lives how we'd like, and if we so choose, we can offset our externalities by purchasing carbon offsets or purchasing RECs. I think it's a massive market, massive opportunity, and the more and more people who realize they have the ability to offset their emissions, that's going to drive the demand. And then I think the catalyst is going to be how easy is it to facilitate market access to individuals and institutions.
Yeah, totally agree. That's the future.
Yeah.
Can we talk about Vision Crypto Cloud? What is it? What does it do?
Vision Crypto Cloud. Okay, this is a game changer for digital asset markets. So Vision Crypto Cloud, think of it as a middle and back office system. So Blockfills has actually built our entire business around Vision Crypto Cloud. So if you think about an entity that is facilitating transactions, there's a whole myriad of issues that comes up in terms of tracking balances for individual accounts, managing liquidity sources, understanding where you might have some breaks with liquidity providers or with counterparties. And Vision really brings that in. Vision Crypto Cloud really brings that into one product. So where we're getting a lot of interest on this is from other OTC desks that are coming up in digital asset markets, other broker dealers, and they're saying to themselves, well, we've built a business in traditional finance, and there's a myriad of platforms that we can run our business on in terms of back office client order management. But in crypto, there's really a gap. So Blockfills has filled that gap. To underline the point, Vision Crypto Cloud simplifies the ability to manage client accounts, liquidity, provide customer-facing statements, allow for the audit of historical transactions, historical transfers, all very seamlessly and easily. It can be branded. And I think the big thing is that front-end client-facing portal that you get with VCC. So your clients can log into a platform that has your brand. Everything's there, all the transactional history, the transfer history, the current position, current statement. And then in the back end, it's managing the liquidity and managing any type of breaks with providers or where liquidity is being sourced.
And is this solution, you did mention that it could be branded. In other words, can this solution be white labeled together with Phoenix?
This can be white labeled together with Phoenix. So really, you think about it as like a one-stop shop. So if you're trying to build a client-facing business in digital asset markets and facilitating transactions, Phoenix can be white labeled for an execution platform. Vision Crypto Cloud can be white labeled and integrated into internal systems to manage all the things we just talked about, and then provide clients with seamless access to historical data that they need in analyzing trades or in compiling their yearly transaction history, et cetera. So you have the professional front-end platform. You have Vision Crypto Cloud, which is the back office and middle office solution. You put it into a box, and that's really a one-stop shop for anyone who's trying to build infrastructure in client-facing business for digital assets.
That's awesome. I wanted to also ask you, we did touch upon the carbon credits and things like that. You obviously guys have been involved in crypto for a long time.
Yep.
How do you personally see institutional firms, maybe prop trading firms, hedge funds, how do you see them using digital assets more broadly in their investment strategies going forward? This is maybe a two-sided question. On the one hand, considering what we're seeing on the regulatory front and what we saw last year in terms of the unfortunate, I would say, situations with some firms, and then also as an asset class all in and of itself, from a trading perspective.
So it's 2023. About 3 years ago, the whole conversation was, when are the institutions coming to digital asset markets? When are the institutions coming? Well, in the past 3 years, we've seen them come. Traditional financial participants are in crypto. We know that for sure. That's obviously being very well reported on and documented in the media. But we've now gone through a bit of a cleansing period in digital assets, which everything moves faster in crypto. So there's cleansing periods in traditional finance. They just typically take a decade. You can go back and look at all the calamities we've had. They take 10 years. in crypto, everything's accelerated. So we had a massive push of retail adoption and institutional adoption in the past 3 years. We've seen migration of labor and talent from the traditional sector into the crypto sector. Obviously, there's been some calamities, and that's caused a purge, what I would say. So this purge is all part of the process from my perspective, and institutions are going to say, they're going to look around and take this opportunity to see who survives. What protocols are going to survive in the asset space? What layer ones are going to be able to compete with Ethereum? Is there anything that's going to compete with Bitcoin on store of value type of an approach? So this whole purge, I think, is very, very optimal in a sense for institutions to evaluate their portfolios and then now make decisions on where do they want to take a next step into their investment cycle. I think crypto has to be part of any diversified portfolio. What that weight is going to be dependent on how aggressive that entity may be, but it has to be part of the mix, just based on returns and also on the uncorrelated profile of Bitcoin versus other commodities or other currencies or other stocks. So that uncorrelation is a driver to add the asset class into a diversified portfolio. And I really do think that this purge, as I'll call it, is a catalyst for further and increased institutional adoption as winners and losers are picked. And then obviously it's going to usher in much needed, in my opinion, regulation in the industry, which will only solidify confidence and trust for institutions to continue to make a push into the asset class.
Great. Awesome. Final question. Is there anything we can look forward to in 2023 from Blockfills? Maybe something you could talk about in terms of new products or, updates to your existing solutions that we spoke about?
Certainly. So Blockfills is continuously trying to innovate and understand the market and what the market needs. And I think that has done us well. So for 2023, what I'm particularly excited about is really the introduction of structured products into the marketplace. So structured products are going to be something that's going to be for more of a sophisticated investor, someone who's probably done this in traditional markets. And the catalyst for this was the development of the options market. So to really build structured products, you need to have a liquid and active vanilla options market. We've seen that come on, I'd say, in the past 2 years and really in the past year and a half. The activity in vanilla options markets and the liquidity available has allowed for this new product suite to be developed, which I'm very excited about because it allows a trader or a portfolio manager to really define what their goals are within the asset class and create a bespoke structure to accomplish those goals. So whether you're looking for yield, there's great structured products for yield. If you're looking to accumulate below the market, for example, there's great structured products for that. If you're a Bitcoin miner and you're looking to, and you have you're selling Bitcoin, you're selling out of your treasury on a schedule, you can leverage structured products to actually get a higher sale price than the current market price. So I think that's what I'm super pumped up about for 2023, and that's another catalyst for institutional adoption as well, when they can put on strategies that they're accustomed to putting on in FX or commodity markets. Now they can put these same structures on in crypto, except for crypto is a 60, 70, 80 vol asset relative to a 20 vol asset or a 10 vol asset. So there's a lot of interesting stuff on the structured products. I'm very excited about the vanilla market in options continuing to develop and trading to accelerate there. On that front, Blockfills, we serve eligible contract participants only in derivatives markets, and that's another reason why our client base enjoys trading with us. We don't touch retail. There's no real retail trading. It's all professional capital. So those are the two big ones. Vanilla options markets, the continued growth, and then structured products. Of course, I think spot markets will continue to be active, and then these perpetual swaps and dated futures are also something to be excited about as well.
It seems quite logical that these would be the next steps in the evolution of the product sets that include crypto. Again, if we look at the traditional markets that we all know and love, yep, or hate, whatever, kind of going through that cycle, very much like those products that we saw 10, 20, 30 years ago.
Of course, and I think this is also why I'm still I'm still pretty positive on institutional adoption, because if we didn't have the demand for this stuff, we wouldn't be building it. So there's certainly demand. The market is evolving in real time. We get to watch it happen right in front of our eyes. And it's a positive in terms of liquidity and risk management, and those are going to be the two big talking points are going to be liquidity and risk management. Where can people trade, size assets, how can people manage risk, and then of course, what types of products are available in the marketplace from a structured side and then even from a vanilla side. Yeah.
Perfect. John, thanks very much for joining us. Good luck at the conference and the rest of the way, and we hope to see you soon. Thanks for giving us your insights today.
Thank you.